Well, welcome everybody to the Funded Trader Community intro class of the stock market. I'm going to construct a mini course here to help people out that are new to day trading, that have no idea what's going on. So this video is really going to mainly focus on what is the stock market and how does it work. Further videos are going to go into psychology, risk management, strategies, candlesticks, trend lines, support resistance, so many more topics. So stick around. There's a lot to unpack. So let's be honest here, right? Nobody ever really explained the stock market to you, I'm assuming. They just said invest early and dip. So let me fix that. Simple, no boring stuff. All right, so imagine this. The stock market is basically a giant online marketplace. But instead of buying shoes or clothes, you're buying pieces of companies. That's it. That's the secret. Now, when companies want more money to grow, to open new locations, to build new tech, hire people, they don't just ask the banks. They say, "Hey world, who wants to own a piece of us?" And they do that by doing something called an IPO, initial public offering, and they get themselves listed on the stock exchanges where they go public. And that piece they sell to the public is called a stock. So when you buy a stock, you're not gambling, you're buying ownership. You're literally saying, I believe this company is going to do better in the future. And because you believe that, you invest in it. So take, for instance, the people who invested in Amazon back in the early 2000s. They saw potential in it, and now I bet a lot of those people are millionaires from those investments they had. Now, how do you make or lose money, right? If the company grows, like your piece is worth more, you make money. Just like the instance with Amazon, the company grew. People who owned stocks from that company also grew with the company. If the company struggles, your piece loses value and then you lose money. Simple. No magic, no secrets. Now, why do prices go up and down? Now, this part is easy. More buyers than sellers will cause prices to go up. If there's more sellers than buyers, prices go down. That's it. No conspiracy, no wizard behind the curtain. It's literally supply and demand. The same reason sneakers resell for more when everyone wants them. The same reason when there's a shortage, and let's say eggs or anything out in the market that is a necessity. If there's a shortage for something, the demand goes up, the price goes up. So why people lose money and don't talk about it? See, most people lose money because the market is rigged. No, it's not the case. They lose money because they panic, they chase hype, they buy late, they sell early, they trade with emotions instead of a plan. So basically, they treat the market like a casino instead of a business. What the stock market really is, though, the stock market is not a get rich quick scheme. It's not free money, it's not luck. It is patience, discipline, psychology, and strategy. If you master all these, I can guarantee you this is the sauce to the market. This is the sauce to becoming a profitable day trader. Patience, discipline, psychology, and strategy. Now, the people who win long term don't rush, they don't chase, they don't panic. They play the game correctly. So I'm going to leave you with this. The stock market has created more millionaires than any job on earth. Not because it's easy, but because most people quit before they understand it. And now that you understand the basics, you're already ahead of 90% of people. And this is just a beginning. And stay tuned for more lectures to come. I hope you enjoyed this lecture. You have a great day.